What's up guys, and welcome back to Wall Street Millennial. On this channel, we cover everything stocks and investing. Today we're continuing our series on financial fraud with another insider trading case. This one involves a business consulting partner in Manhattan named Puneet Dixit. The Securities and Exchange Commission charged him with illegally trading in advance of a corporate acquisition on Wednesday, November 10, 2021. The complaint was filed in a federal court in Manhattan. According to the SEC, Dixit was a partner at a global management consulting firm. Other news outlets, including CNBC, reported that consulting firm to be McKinsey, one of the so-called Big Three consulting firms. The case involves McKinsey's client Goldman Sachs and their takeover of fintech company Greensky, Inc. As a partner at McKinsey, Dixit had intimate knowledge of an acquisition before it was publicly announced. He used this information to profitably buy out-of-the-money call options on Greensky before the announcement. He sold the calls on the same day as the announcement was made, making about $500,000 in illicit profits pretty much overnight. In this video, we'll take a closer look at what Dixit did and how he was able to make so much money on this acquisition. Greensky is a fintech company that primarily engages in lending for home improvement projects. They provide financing for home buyers and owners to have renovations and additions done on their homes. The bulk of their business comes from partnering with contractors, so that when contractors pitch their ideas to customers, they have an option to help the customer pay for the contractor work. In this way, they're able to achieve high customer retention and recurring revenue, since the contractors essentially do all the work of selling their product to consumers. Greensky was founded in 2006 and in recent years has experienced rapid growth. On top of that, it has been consistently profitable since it went public in 2018. You can see here from our website wallstreetmillennial.com that they had positive net income in every single quarter going back to 2017, except for the quarter when the pandemic first hit. Their strong business and the fact that they're a strong player in the fintech industry led to some people speculating that they would be a takeover target. In September of this year, Greensky and Goldman Sachs announced that Goldman would be acquiring Greensky in an all-stock merger agreement. It specified that each share of Greensky would be converted into 0.03 shares of Goldman Sachs common stock. Based on the stock price of Goldman Sachs, the agreement valued Greensky at approximately $2.24 billion. Goldman Sachs said that the acquisition would enhance their ability to provide customers with borrowing, financing, and investing services. They hope to generate synergies between Greensky's growing network of merchants and Goldman's own Marcus consumer banking platform. Puneet Dixit was intimately involved in the merger between Goldman Sachs and Greensky. Dixit is a 40-year-old partner at a consulting firm reported by media outlets to be McKinsey, based in New York City. He led the firm's North America unsecured lending and digital payments service lines. Since late 2019, Dixit was part of the team that provided consulting services to Goldman Sachs that focused on point-of-sale lending. Greensky is a point-of-sale lending services company that announced publicly that they are looking towards, quote, potential strategic alternatives, unquote. Whenever a company says they're pursuing strategic alternatives, that usually means that they're soliciting buyers to acquire their company. This can be the result of the company's poor financial condition, the founders or significant shareholders wanting to cash out, or other reasons. In the case of Greensky, Goldman Sachs engaged McKinsey and Dixit to work on the potential acquisition of Greensky, a project that they codenamed Project Glacier. By December of 2019, McKinsey and Goldman entered into a final agreement to work on this acquisition project and signed non-disclosure agreements. Goldman then granted McKinsey and thus Dixit access to sensitive and confidential data relating to due diligence processes for the acquisition. The consulting firm needed this data to perform work regarding valuations, financial numbers and projections, etc. relating to the potential acquisition. However, coinciding with the onset of the pandemic, Goldman cut off negotiations with Greensky about the acquisition in March of 2020. This is consistent with many financial deals during that time, such as the high-profile go-private deal between the private equity firm Sycamore Partners and the parent company of Victoria's Secret. That deal also fell through at the beginning of the pandemic. However, in the middle of 2021, with the reopening well underway, Goldman and Greensky restarted talks. The 2019 non-disclosure agreement was extended. On July 15th, Goldman Sachs submitted a formal acquisition proposal to Greensky. However, Greensky quickly rejected the proposal. Throughout that summer, Goldman Sachs continued to work on negotiations. They enlisted McKinsey, and with McKinsey, Puneet Dixit, to formally put together a document regarding Goldman's new proposals to acquire Greensky. Almost immediately after Goldman asked Dixit and his team to work on the project, on August 6, 2021, Dixit proceeded to purchase thousands of call options on Greensky. At the time, Greensky was trading for about $8 a share. Dixit knew that an acquisition announcement was likely to happen, so he chose a strike price of $10. That means that the stock would have to increase by 25% just to avoid expiring worthless. The expiration date on the calls was just 4 months later, December 17th. Throughout the remainder of August, internal emails within McKinsey show that they were aware of potential other interested buyers of Greensky, and thus wanted to move fast on the deal. By the end of August, one of Dixit's colleagues reported to him that Goldman was in the formal process to make an official offer, and that a final best offer was imminent within weeks. During this period, Dixit continued to buy additional call options on Greensky. In the evening of September 9th, Dixit learned from colleagues that Goldman had unofficially won the deal from Greensky. The colleague told Dixit that a deal would likely be signed the following Monday, September 13th. Dixit continued to purchase more calls on Greensky following this news. But Dixit did some of his most blatant buying on September 13th from within McKinsey's own internet network. He bought hundreds of out-of-the-money calls expiring the same week on September 17th. That same night, he also transferred more money into his brokerage account, which he used to buy more calls on Greensky the very next morning. He also sold some of his own Greensky options expiring in December and in January of 2022, and used the proceeds of this sale to buy tens of thousands of dollars worth of calls expiring later in that week. At that point, he had tens of thousands of call options on Greensky, many of which were significantly out of the money and with an expiration date within days. The very next day, on September 15th, Goldman Sachs announced publicly that it had entered into a definitive agreement to acquire Greensky in an all-stock transaction. The details of the agreement stipulated that each share of Greensky would be converted into 0.03 shares of Goldman Sachs. At approximately $400 a share, that implied that each Greensky share would be worth approximately $12. Immediately, the market price of Greensky stock shot up from less than $8 to very close to $12 a share. That more than 50% spike in stock price was fully accretive to Dixit's highly speculative call option portfolio. His out-of-the-money weekly calls were suddenly more than $2, or 20% in the money. By 9:35 a.m., only 5 minutes into the start of trading, he had liquidated hundreds of thousands of call options. Collectively, this position had cost him just $23,000 to put on. The proceeds he collected on their sale amounted to almost $450,000. He also liquidated $26,000 of Greensky calls in an account on behalf of his spouse, a position that only cost $1,500 to put on originally. Overall, his trading incurred an annualized return of about 6,000% for more than $450,000 of illicit gains. Dixit appears to have made no real effort to hide his illicit insider trading throughout the entire process. One might wonder whether he even knew what he was doing was illegal and counted as insider trading. However, as a partner at one of the most prestigious consulting firms in the world, he was subject to very clear rules and regulations regarding the use of material, non-public information. He breached a duty of trust and confidence with his employer that required him to maintain confidentiality of the information that he received in his role. Instead, he decided to use this information to line his own pockets, even more than they already should have been just from being a partner at McKinsey. Within less than 2 months, the SEC was able to analyze the suspicious trading behavior and trace it back to Dixit. On November 10th, they charged him with illegally trading in advance of a corporate acquisition by his firm's own client. He will likely face hundreds of thousands of dollars in fines and disgorgement, and likely face prison time. Alright guys, that wraps it up for this video. What do you think about Puneet Dixit's decision to buy out-of-the-money weekly calls on an acquisition target that he was working on at McKinsey? Let us know in the comments section below. If you enjoyed this content, make sure to smash the like button and subscribe so you don't miss future videos. In the meantime, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.